Recording in progress.
Right. Okay, guys. Can you hear me? I'm audible to you?
Yes, sir.
Just right. Okay. So make sure to turn on the videos and wait. Let's start the class. Uh, we are discussing accounting elements, right? Okay. So we discussed last week. I discussed about assets. Am I correct? Right.
Yes.
So last week we discussed about assets. In here, right. So our subtopic is ledger account and double entry bookkeeping. Now, we discuss about it. Just wait. Right. Okay. Hope you can hear me, right? So, we discuss about accounting process. Once a transaction happen, what we do next one? Prepare what? Business documentation, right? We prepare business documentation. Prepare business documentation, right? So prepare business documentation. So after that, what is the process next one?
Recording the original entry.
Yes, recording of
Original entry.
recording of coding in books of original entry. Books of original entry. Then after that,
Original entry.
sorry, posting to ledger.
Ledger account.
Ledger. Then after that, trial balance. Next one, financial statement. Finally, we prepare financial statement. This is the accounting process. Once the transaction happen, we prepare business documentation. We call it as source document. Source document. Then we record in the books of original entry. We call as prime entry books. Then we posting it to the ledger, right? I told you. Can you please turn on the videos and wait, everyone, right? So everyone should stay with the video, right? So I told you ledger is the place where we maintain all the ledger accounts. Understand? Right? So, right. Ledger is the place where we maintain all the ledger accounts. Then we, after balancing the ledger account, we prepare trial balance, then the financial statements, right? Now, last week, before moving to the books of original entry, we discussed about the ledger category. I told you there are two types of mainly ledger. What are the two types of mainly ledger? Now ledger accounts mainly can be classified into personal account and impersonal account, right? So personal account means account for people or business. Impersonal means other accounts. Normally personal accounts are maintained in subsidiary ledger, supportive ledger. Can you remember? Right? So there is another
Yes.
ledger can be classified into general ledger and the subsidiary ledger. Now this is the general ledger and there can be subsidiary ledger. To prepare trial balance, we take the general ledger, right? Now once we take a subsidiary ledger, we maintain control account in the general ledger, right? Then impersonal account are mainly classified into two: real account and the nominal account, right? Real account means machinery, equipment, computer, furniture, like those kind of things. Then nominal accounts are like income expense account, revenue, wages, those kind of things, right? So now we record transactions in the ledger using double entry principle, right? So last week I gave you the double entry principle. Hope you can remember. I told you when X we call as increased debit, decrease credit, and lie increase credit, decrease debit, right? Assets and expenses. So this is the my way of remember. X means assets and expenses. Assets and expenses. Like liability, income, and equity. Increase credit, decrease credit. Easy, clear to you guys? Can you hear me? Right? Can you please turn on the videos? Randeep and Liashi, are you there? I'm audible to you, right? Hope you can hear me, right? Okay. Make sure to turn on the videos, huh? Right. Right. So you need to remember this one, right? So I told you if we take this one as a ledger account, we can identify debit side and credit side. So when the assets and expenses increase, we record in the debit side of the relevant account. When the liability, income and equity increase, we record credit side of the relevant account. When assets and expenses decreases, we record credit side of the relevant account. When liability, income and equity decreases, we record debit side of the relevant account. If I ask you it, you need to tell me it quickly, right? If I ask you like when asset increase, it's debit or credit, you need to tell me what, right? Can you hear me?
Yes.
Yeah, okay. Just give me 1 minute. Right. Okay, right. So when asset and expenses increase, it's debit, decrease credit. Liability, income and equity increase credit, decrease debit. Right. Okay. Now last week we discussed about assets, right? You know assets. Assets are resources arose as a result of past transaction, which will inflow future economic benefits to the business and controlled by the business. These are the three elements, characteristics of assets. Can you remember, guys? Right? Then we classified assets into two: current assets and non-current assets. Now, current assets are the assets which we expect to sell or convert into cash within next 12 months. Non-current assets are the assets which we expect to use more than 12 months. Understand? Right? Hope it's clear to you. Now today I'm going to start from the liability. We wrote these things last week, right? Absentees, you can refer the recordings available in the LMS. So today I'm going to discuss about liability. Right. Liability. Write the subheading liability. I want the answers from me. Right? Okay. What is the term called liability? Liability. Yes, can anyone tell me? Liability. Just the simple thing. What is a liability? Any idea? Liability means payables of the business. Understand? Liability means payables of the business. Okay? Simply. Now, if you obtain a bank loan, till you repay it, you are having a bank loan obligation. Clear to you? Right? Now, when we define the liability, you can write current obligations of the business, right? When we define the liabilities, just wait, I'll give you in the format of the last week the same way I gave to you. I'll use the last way form. Current obligations of the business that had arose as a result of past transaction Now, before moving to accounts, you need to have a better knowledge about these five, right? As a result of past transaction, which will outflow future economic benefits, future economic business, future economic benefits from the business when the settlement is made, right? We can identify three characteristics in the liabilities, right? Current obligation in the present. Don't write, look here, I'll give you enough time. Had arose as a result of past transaction, right? Outflow future economic benefits when the settlement is made. Current obligation is in the present tense. In present, it is an obligation. Arose as a result of past transaction, it is the past tense. Outflow future economic benefits when the settlement is made, it is the future tense. When we settle the liability, we need to pay cash. So our economic benefits, cash outflow from the business. Is it clear to you guys? Send me a thumbs up. Can you hear me? Right?
Yes.
Right. Hope it's clear to you. Right. Now, what are the examples we can take for liabilities? Right? Examples. Debtors. Sorry, creditors. In another word, we can write trade payables, right? Now, last week I gave you the thing called debtors. Can you remember? Last week we wrote about debtors. Within brackets under debtor, can you write trade receivables? Within brackets under debtor, you can write trade receivables. In here, creditors, trade payables. What is the term called trade creditors or trade payables? Yes, any idea? Creditors or trade payables? Creditors or trade payables? Any? What is a trade creditor or trade payable? Yes. Now, when the business purchase goods from credit basis from another business, other business we identify as our liability till we pay back. Now think, our business engaging purchasing and selling mangoes. When we purchase mangoes on credit basis from another person, credit basis means we are not paying cash at the time of the transaction, we are settling the transaction later, we are paying cash later, right? So till we pay back to the other person who supply their mangoes on credit basis to our business, we identify that person or the business as a liability. We call that liability as trade payable and trade or the creditors. Clear to you?
Yes, sir.
Parties who supply trade goods on credit basis. We discuss about that as well, right? So then we can take bank loan. What is a bank loan? Right? Normally, you know, systematic business obtain loans, cash loans only from banks. In a systematic business, there doesn't obtain any cash from another business. We only obtain goods on credit basis from another business. So that part we call as creditor or trade payables. We don't obtain any cash from another business. We obtain cash only through banks. Clear? So who are what is the term called bank loan? Bank loan means uh, business obtain loans, means cash from banks, or another word, financial institution, right? We discuss about those things. Then we can take another example like bank overdraft. What is a bank overdraft? Can anyone tell me bank overdraft? Any idea? The bank overdraft. What is a bank overdraft? Yashi, are you there? Hope you can hear me, right? Yeah, I can't hear you. Can you hear me now? Your mic is not connected. Can you hear me, Dina? Yes, right. Sandhi, can you hear? I'm audible to you. Yes, right.
Oh,
You
oh.
right. What is a bank overdraft? Can anyone tell me? Bank overdraft. Any idea? A bank overdraft. Yes.
How
Yeah.
much you owe to the bank?
Because of what? Now you owe to the bank is the term called bank loan. When you obtain loans, all right, you can text, no issue. What is a bank overdraft? I just want to know about a bank overdraft. Yeah,
Interest?
sorry,
Say interest?
no. Now you know there are three types of accounts in the banks: savings accounts, fixed deposits, and current account. Have you ever heard these things? Savings account, fixed deposits, and current account. Savings account, you know, you can deposit money and withdraw money at any time. You are receiving a debit card, you can use ATM or CDM facility, or you know, you can use your card to do some payments in the shops. Can you hear me? Right? So using savings account, you receive some sort of interest as well. What is a fixed deposit? You need to fix your monies for a certain period of time, right? So then you can obtain higher interest compared to savings account. But you need to fix your money for a certain period of time. You can't withdraw it until it's mature, clear to you, right? But you can uh, withdraw the interest. Now when you are going to the bank, and once you open a fixed deposit, once you are going to open a fixed deposit, they are going to ask you two questions. So you need the interest monthly wise or maturity, right? So monthly wise means you can withdraw only the interest monthly wise, and at the maturity period, which means if you fix your money for 5 years, at the end of the 5 years you can obtain the interest clearly, right? That is the term called obtaining interest at maturity, right? So but you are receiving higher interest than the savings accounts, right? But the main thing is you can't withdraw your uh, fixed money. Once you withdraw fix your money, you can't withdraw it. What is a current account? Current account, that is the important part in here, right? Current account. What is a current account? Yes. Now once you open a savings account, you receive a passbook. Passbook දැකලා තියෙනවද? Have you ever uh, seen something like passbook, right? It shows the deposit money and withdraw money, the summary like this. Once you start a fixed deposit, you receive a checkbook. Once you start a current account, you get a checkbook. Sorry, once you open a fixed deposit, sorry, you get a certificate, right? So that certificate, uh, it's not like the certificate which you can obtain once you win a game. It's not like that. That certificate is a kind of a thing which include everything: amount you fixed, and the interest, and the maturity period, how much you get. Now when it comes to savings account interest fluctuating monthly wise, depend on the central bank's intention. They sometimes increase the interest, sometimes they decrease the interest. So the savings account interest is fluctuating. But when it comes to the fixed deposit, it's not fluctuating. Now think you are starting a fixed deposit today, until it mature, the printed interest you will get until after the maturity period. Clear to you guys? The interest is not varying, same interest. But once you open a current account, you get a checkbook, right? So you can issue checks. Have you ever seen a check, right? A check, it is a kind of a payment gateway. You can do some payments via checkbooks. Now let's come to the bank overdraft. Bank overdrafts are related with current accounts. There are different kinds of banks in Sri Lanka: licensed commercial banks, licensed specialized bank, registered financial institutions. Out of this, current account only can be opened in licensed commercial banks. There are 24 licensed commercial banks in Sri Lanka. Now in licensed commercial banks, you can open a current account, fixed deposit, and savings accounts, all three types. In licensed specialized bank, you can open only these two, right? When it comes to you know those things as well. You can open only these two in license specialized bank, but you can open these all these three in license commercial banks, not the commercial bank. Commercial bank also kind of licensed commercial banks. You know that blue color bank, commercial bank, right? It is also comes under these licensed commercial banks, right? So there are 24 licensed commercial banks in Sri Lanka. So there are 6 licensed specialized banks in Sri Lanka, right? Now what is the bank overdraft? Now think, this is you, this is your bank, right? Think the bank, you are having maintained a current account. Your balance is 50,000. How much is your balance? 50,000. Without knowing that, you issued a check to this person. See, this is you. You maintain a current account in this bank, right? So without knowing your balance, you issued, this is C, issuing rupees 70,000 check to this person. Think your bank is HNB bank. C's bank is think BOC bank, right? Now banks are interconnected, right? So now once you give this check, once C give this check to BOC bank, so the banks check, uh, banks connect through Lanka clearance, no need that much. Now HNB bank need to deduct 70,000 from my account and transfer to C, because I issue a check to this person to give money. Instead of giving cash and coins, I gave a check. Can you hear me, guys? Right? So I gave a check. That person gave the check to his bank, because check is just only a piece of paper. We can't do anything to obtain money. We need to deposit in the bank. Now my banks need to deduct 50,000 from my account and transfer to their, but my balance is 50,000. What my bank do, right? So my bank going to do like this. So deduct 50,000 from my account, and if I'm a good customer, using bank's personal money, they give 20,000 and transfer total 70,000 to this person's bank. Deduct for totally my 50,000 balance, and using bank's personal money, they add another 20,000 and transferring totally 70,000 if I'm a good customer only. Understand? Turn on the videos and wait, right? So transferring totally 70,000, right? So the bank is giving a temporary loan to me, like giving their own money, right? Like 20,000 without my bank doesn't need my approval. If I'm a good customer, which good customer means think my account is already activated every time cash depositing and withdrawing and having anything, right? So my balances are like I am having 6 digit uh, account balances in my account. So bank are okay to give this loan. This is kind of temporary loan which gives by my bank to me, uh, transfer the funds, right? So bank overdraft means the ability to issue checks more than bank balance. More than bank balance. It only can be obtained in current accounts more than bank balance. Now, think your savings account balance is 50,000. You can't withdraw money more than 50,000, right? It's only for the current accounts. The amount which gives by the bank, which gives by the bank as a temporary loan. That is also kind of a liability. Is it clear to you? Send me a thumbs up, because it's liability to the business, because bank give their personal money, right? Are you okay up to here, guys? Send me a thumbs up. Right,
Yes, sir.
enough for now. I'll give more when we are doing discussing. Okay, write the liabilities and raise your hands. Then let's go to the equity. We finished assets. Write these workings as well, huh? And finish and raise your hands. Then let's go to the equity.
Sir, 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 sir.
Yes.
Sir, ඕකෙන් sir අපි ledger
ඇහෙන්නේ කොල්ලෝ.
ledger sir අපි ledger council ledger control accounts වලද දැන් ඉන්නේ
ඒ ටික තාම කරේ නැහැ. කරගෙන යන ගමන් පාත් එකක් තියෙනවනේ. පාත් එකේ යන්න ඕනේ කොල්ලෝ. පැන පැන යන්න බෑ, නැත්තම්
sir
තේරෙන්නේ
මම
නැහැ. right?
exam ලියන්නේ ඊළඟ අවුරුද්දේ
alright. හරි හරි. it's okay. දිනලුත් ඒ ඊළඟ අවුරුද්ද තමයි ලියන්නේ. right? Can raise your hands, then we can go to the equity and income expenses, right?
sir 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 sir
What is your matter?
sir අපිට O level වල paper 1 එකටයි 2 එකටයි කොච්චර වෙලාවක් දෙනවද
මං ඒක ඔක්කොම කරලා තියන්නේ කොල්ලෝ කලින් recordings වල තියෙනවා, right?
අන්න
You can watch the recordings available in the LMS.
අන්න නෑස මංහන්න අපිට පේපරේ කොච්චර වෙලාවක් එනවාද ඉව
ඔව් මම ඒක
කරන්න
ඒක paper revision එකේ පළවෙනි වීඩියෝ එකේ කරලා තිනවා. ඒක බලන්න. right? හරිද?
අපේ
Once you to register to the LMS as well, every
පැය
recording available in the
දෙකක්ක
LMS.
දෙනවාද
huh?
පැය
ඒක තමයි කිව්වේ ඒක recording එකෙන් බලන්න කොල්ලෝ. දැන් මෙතනට අදාළ නැහැ.
දෙකක්ක දෙනවාද
right? okay, you can watch the first recording, right? You need to know the time, right? So finish, make sure to raise your hands. Once you finish, raise your hands, guys. I'm waiting for your raise hand. Hope you are still writing. Still, have you finished? Is no. And others? and Randeep. Hold on, right? Dinal and Randeep, are you there?
Aspa.
Okay. Done? All good?
Yes.
Right. Now, before moving to equity, let's categorize the assets and liabilities. Right? These things are not in the book in a proper manner, right? But without having a proper knowledge about these things, we can't do the calculation. Okay, right. Okay, now next one is about categorization of liability, assets and liability. Right. Now you know when it comes to assets, don't write, I'll give you enough time. Assets. We categorize as two non-current assets, next one current assets, right? Non-current assets means assets which expect to use more than 12 months, which means 1 year, which means assets which expect to use for a longer period of time, for a longer period of time. Current assets means assets which will convert into cash or sold within next 12 months, which means from the concerned date, right? Which means assets which outflow, which will which assets will which won't last in the business more than 12 months, right? Okay. Now, when it comes to assets, we can categorize into what are the example: non-current assets, land, building, furniture, right? Equipments. Hope you can hear me, right? Furniture, motor vehicle, equipment, fixed deposit, goodwill, investment. Those are kind of things. As a common thing for these land, labor, furniture, motor vehicle equipment we call as property, plant and equipment. We call this as PPE. For current assets, we can take debtors or trade receivables, then stocks, cash balance, which means cash in hand. Those things will change daily. That's why not now. Think now what is the term called current assets? It will change, which means convert into cash less than 12 months, right? So, like it is change in our think today our cash balance is 12,000. Tomorrow it will be more than 12,000 or less than that. It's changing day by day. That's why now when we purchase land building, we keep it for longer period of time. We don't. There is no any intention to sell. Our intention is to use it. Cash balance or cash in hand. Bank balance. Bank balance is current account balancing. There is another term called receivable income. Receivable income, right? Those kind of things. Now we use liquidity basis to represent the assets. What is the term called liquidity basis? If any asset we can convert into cash immediately, which means liquidity is high. If the assets will take time to convert into cash, we call it as liquidity is lower, which means will take time to convert into cash, right? So if like liquidity basis means to convert into cash takes time, right? Which means the asset convert into cash takes time, which means liquidity is lower, which means can't convert into cash immediately. Those are non-current assets. These things will take time to convert into cash. Land building, can we convert into cash these things today? No, it takes time. There are lawyer fees and those kind of things we need to sacrifice. Can easily convert into cash, can quickly convert into cash, which means the asset. So liquidity is high, can convert into cash immediately. So those are current assets. The highest liquid asset is cash balance. No need to convert into cash further. Cash balance is the highest liquid assets. Why? Cash is cash. We can't convert into cash again, right? So the highest liquid asset is cash balance. Second highest. Can you hear me? I can't see you. Are you there, guys?
Yes, sir.
Randeep, are you there? Oh, Yasha, I hope you are there, right? The second highest liquid asset. What is the second highest liquid asset? Is the bank balance. Why? We can quickly go to the bank, or we can use ATM or convert into cash. Other current assets are like high liquid assets, but not more than this. These are less liquid assets. Will take time to convert into cash. Is it clear? To send me a thumbs up, right? So hope you can hear me. These things we need to when we are preparing the accounts, right? Okay. Are you okay up to here?
Yes, sir.
We write this and raise your hands as well. Once you finish, raise your hands. Here on the
Yes, sir.
කොයිවා මොකද ප්‍රශ්නයක් ඇහුවා නේද ෆස්ට් පේපරේට මොකද්ද පේපරේ නේද
ඔව්.
ඔයා මගේ වීඩියෝස් ටික බැලුවද පරණේවා
නෑ ලකුණු නෑ සර් වෙලාව කොච්චර හම්බ වෙවි එනවද?
ෆස්ට් පේපරේට
පේපරේ
2
ඉවර වෙනකන්.
hours second පේපරේට 1.5 hours 1 and 15 minutes right
ඈ?
ඔව්
ඒ කියන්නේ සෙකන්ඩ් පේපරේ ලේසිද?
second පේපරේ තියෙන්නේ case study දෙක right first
සර් සෙකන්ඩ් පේපරේ SOFP එකයි ඉන්කම් ස්ටේට්මන්ට් එකයි විතරයිද තියෙන්නේ?
ඔව් ඒකේ case study තියෙන්නේ ප්‍රශ්න වගේක් ඒගොල්ලෝ ලොකු ස්ටෝරි එකක් දීලා අහනවා ඒකට උත්තර ලියන්න තියෙන්නේ
ආ.
right මුලින්ම බේසික්ස් ටික කරගත්තාම ඒකට යද්දි වඩා තේරෙයි right
සර් ඉන්කම් ස්ටේට්මන්ට් එක SOFP එන්නේ සෙකන්ඩ් පේපර් එකටද?
පේපර් එකට තමයි එන්නේ ඒවා.
ඔව්.
මේක ක්ලාස් එක.
Then raise your hands. Once you finish, raise your hands. Make sure to write these things. Finish, let me know, Dinal. After finish, unmute and tell me, Dinner.
Done.
Others done? Yasha, Randeep, right. Okay, we categorize the assets as well. Now the liability categorization, right? So you need these basics before going to calculations, right? So this is about categorization of assets and liabilities, right? So in here we are going to categorize the liabilities as well. Right. Liabilities mainly we classified as into two. Non-current liability and the current liability. Non-current liability means liabilities which can be settled by taking, turn on the videos and wait, more than 12 months, which means non-current liability means as installment wise or monthly wise, we can fully settle the liability by taking more than 12 months, more than 1 year, right? More than 1 year. Current liability means liabilities which needed to be settled within next 12 months, which means less than 1 year we need to settle, right? For non-current liabilities we can take bank loan. There are more I'll discuss when we discuss in the maths part. Current liability, trade payables, or creditors, bank overdraft. Bank only gives this for 2 weeks into full settle. We don't need to go to the bank and deposit. Once we deposit that 20,000 to the bank account, they will deduct from it our account, right? Then expenses payable, in another word, accrued expenses. Now liabilities we present in the P&L and in the SFP using priority to release. basis. If the priority is release, priority to release is high, it is a current assets, which means current liability, which means need to settle immediately. No current assets are, current liabilities are, we need to settle less than 12 months, right? Priority to release is lower, that is a non-current liability. Can take time to settle the liability. We take more than 12 months to settle the liability. Easy, clear, you guys, right? So what is the highest priority release? Highest priority to release. The highest per release is bank overdraft. Bank overdraft. I told you bank give this only 12 months, 2 weeks. In 2 weeks we need to settle it, right? So this is the categorization. Now out of the accounting element, we just finished two things, assets and liability. Now you know, I'll give you enough time. Before that, look here, right? So hope you can see the PDF, right? Now in the PDF, you know, I discuss up to here in the prime entry, in here, books of original entry or the prime entry books. I gave you the introduction. You know, there are 7 books of original entries: sales journal, purchase day book, sales return, purchase return day book, cash book, petty cash book, journal. But now to record it, you need to know the double entry principle, right? So that's why I skip these parts, right? And I just came to the next lesson, and these days I'm giving you the knowledge of double entry, right? So I told you, right? So about the debit or credit concept, you need to have the clear idea, then we can move to the back, right? So right, okay. So once I finish these 5 accounting elements, we can move to the those part, right? So first of all, you need to have a clear idea about assets, liability, equity, income and expenses. Easy, clear, you guys? Can you hear me? Right?
Yes, sir.
Okay, so write these two and raise your hands up. And then I know you are like bit lazy now. Why still there's no mathematics part? Once we move to the mathematics pass, it will be okay, right? Can you hear me? Right? Okay, guys. Finish it and raise your hands up to here. Then let's go to the equity. Once you finish, raise your hands. Let me know. Done up to here? Inal, Liasha, can you hear me?
Done, sir.
Done, right. Okay. I know it's a bit boring, but try to listen now. Okay, we finished two things. We finished assets, we finished liability. Now it's about equity. Look here, this part is really important. Can you hear me? Send me a thumbs up. Liasha, are you there? Dinal and Randeep, are you there? Right. Okay. So we finished assets, liability. Now it's about equity. What is the term called equity? Next one, write the next accounting equation. So net accounting, next accounting element, equity. Or another way, net assets. What is the term called equity? Amount of assets belongs to the owner. Amount of assets belongs to the owner. Or owner's ownership. Right? Now you know total assets of the business equal to equity plus liability. Why? You know, in here I told you, if this is the business, you know, think the business assets. Now owner invested, think this is owner. Owner invested, think invest 500,000 and obtain a bank loan. This thing, this is a bank. We obtain bank loan 100,000. Altogether, business is having 600,000 cash. Now, this cash is business assets, belongs to the business. Who invested? Or owner or bank. So, to represent owner's ownership, there's a separate accounting element called equity, right? Since we obtain this as a liability, there is a liability. We obtain this as a loan, so there is a liability. Total assets equal 600 assets equal equity plus liability. Assets are 600,000. Out of that, owner invested 500,000. Obtain bank loan 100,000. This is assets and this is ownership of assets. Ownership of assets belongs to a owner, or if we obtain a loan, belongs to that person as well. Now, how to calculate the equity, right? Okay, now calculation of equity. Equity for the net assets. In another way, net assets. We can use two methods. Method 1, method 2. In method 1, if we know about the calculation of net asset or equity in a sole trader. Now, first of all, I'm giving sole trader, single ownership. If we know about assets and liability, right, we can calculate total equity equal total assets minus total liability. How I get it? So, if assets equal equity plus liability, I keep equity in here and I'm taking liability to this side. Assets minus liability equal equity, right? But if we don't know about assets and liability, right? Now, in this formula, we can calculate equity at any date. Think this is 2024, 2025 accounting period. Starts with 1st of April 2024, ends on 31st of March 2025. Our accounting period begins on April 1st, ending on March 31st. We can calculate equity at any date using this formula. Is it clear to you? Right? But in this next formula, we can calculate equity 1st of April 2024, 31st of March 2025. We can calculate equity at the ending date only that date, right? Only that date in second year. If you don't know about assets and liability in here, if you don't know about of the business assets and liability. How to calculate? First, we take capital. Capital means beginning equity. Now, our objective is to calculate closing equity. Closing equity. Closing equity means equity as at 31st of March 2025. Ending date equity calculation is the object. First, we are taking opening equity, this date equity, number 1. To that, Another a name for the opening equity is capital, which means equity as at 1st April 2024. To that we add additional capital. What is the term called additional capital? When owner invests something to the business as an addition during the period. Now, if owner invests motor vehicle to the business beginning date, it is a capital. But by the time during the period, if owner invests something throughout the accounting period, owner's closing equity decrease, because when owner invests something to the business, owner's ownership increase. Can you hear me, guys? Understand? Now, once you start a business and once you invest something to that business, your ownership increases, right? And from that we deduct drawings. Drawings means what? Owner's withdrawals. Owner's withdrawals. We deduct it. Why? Owner can withdraw anything from the business during the accounting period. He can take anything. When he withdraws something from the business, owner's closing equity decreases. To that we add net profit. If there's a net loss, we deduct it. In here, within brackets means minus. What is the term called net profit? You know, profits equal, I'll separate. Profit equal income minus expenses. I'll explain income and expenses in next part, right? Think if the income is 100, expense is 80, profit is 20. But if the in expense is 100, income is 80, there's a net loss. That's why in minus. Minus within brackets means minus, right? If there's a now, instead of adding net profit, we can add income or minus expenses. We can do anything. We can add net profit, which means we can add this 20, or we can add 100, or we can deduct 80. Clear to you guys? Send me a thumbs up. Dinal, are you there?
Yes, sir.
Right? We can do anything, both. Right? Now, I'm going to take this into here. It's like this. Closing equity. This is additional capital. Drawings. Profit are like this. Then so this is opening equity. Opening equity. This closing equity. If I write you like this, closing equity or closing net assets, in another word, closing net assets equal opening equity, in another word, opening net assets. Equity means net assets, right? Both are same. CNA means, right? All right. Closing equity. Closing means closing date, now. Closing net asset. Both are same. Equal opening equity or opening net assets, right, plus additional capital minus drawings plus net profit. Net profit, right? So closing equity or closing net assets equal opening equity or opening net assets plus additional capital minus drawings plus net profit. I'll write it like this. Now we can calculate the profit of the business using this formula. How to calculate profit? I'll keep profit in here, keep profits in here and taking other things to this side. Closing equity or closing net assets. You know, in maths, once I take to this side, it convert into minus. Opening equity or opening net assets. When additional capital comes to this side, minus additional capital, then plus drawings come to this side, it becomes to this. Likewise, using the second formula, we can calculate the business profit as well. Though we don't know about assets and liability, we can calculate the profit as well, right? So how to calculate the equity in a sole trader? First we take the owner's opening date equity. To that we add additional capital. Additional capital means owner's investments during the period. And from that we deduct owner's withdrawals. Net profit means income and expenses generate during the accounting period, right? Right? Income and expenses generate during the accounting period. I'll explain income and expenses in next accounting element, next day, right? Right. Okay. So first write these things and raise your hands. In corner you can draw this one, right? Write from here and raise your hands. Can you hear me, guys? Hope you can understand, right? If there's any matter you can ask. So finish, unmute and tell me, okay, guys? Am I audible to you?
Yes, sir.
Finish it, and once you finish, let me know, unmute and tell me.
Okay, sir. Done, sir.
Right. Okay. Right. So now we discuss about assets, liability, and equity. There are two pending things: income, expense. Next week, I'm going to finish these things, right? So then we can move to the textbook calculations, right? So our student book calculations, then you can have a clear idea about those, right? Okay. Make sure to study up to here. Let's no classes on this Saturday because our institute there is a get together in Saturday. So let's meet next Thursday. Clear to you, right?
Yes,
Okay.
sir.
So thank you for the participation. Bye. God bless.
Bye, sir. Thank you, sir. Good night, sir.